Welcome to Investor Copilot. I am Viraj and today we are going to discuss bonds. So let's get started. What is a bond? A bond is categorized as a fixed income security. It is a debt instrument issued by a corporation or a government or a legal entity to finance or expand their operations. So the fixed income security is an umbrella of products where you provide debt to the issuer and they provide you an interest payment or some sort of payment in return to that debt. Fixed income securities represent a loan to the issuing entity and differ from equity fundamentally. Investor is not a partial owner of the issuer entity in any sense. So this is a fundamental difference between equity and debt. Equity makes you a party to the profit and loss of a company because you are a fractional owner of that company. However, fixed income securities don't do that for you. You are only lending to that entity and you don't have any other relationship with that entity other than that you are a lender. These debt instruments provide investors with a return in the form of periodic payments and an eventual return of the principal amount at the term of maturity. So we will look at all these terms, principal amount, maturity, and periodic payments later on. Other notable fixed income securities include GICs, which is a very popular product offered by banks, certificates of deposit, mortgages, or asset-backed securities. Now let's look at features of a bond. So a bond has a maturity period of at least a year, and in many instances it's much more than that, 5 years, 10 years, or more. So a bond provides investors interest payments called coupon payments on a fixed schedule. Bonds can be traded on the market, but they are not traditional liquid assets. We'll talk more about this concept later as well. Bonds are capable of generating regular income with a low net risk and protect the investors against volatility associated with the issuer entity's financial performance. So since a bond is a low risk and safe instrument, you are not really impacted much by the fluctuations in financial performance or profit or profitability of the issuer, if that's a company or even a provincial or federal government, a municipal government. Their budget is their lookout, but you won't be affected by it as much as you would as a shareholder. Bonds typically generate lower investment growth as compared to stocks for companies that end up creating massive financial value and intellectual property value from their products or services. So, case in point here is Tesla or Microsoft or Apple, who have been able to create massive financial value and market capitalization for their innovation. Their shareholder value grew exponentially, but bondholders won't nearly experience as much growth. They would be far behind. So this is a safety versus reward, like low risk versus high risk scenario that I'd like to point out with which is a marked difference between stocks and bonds. Bondholders have a priority over common stockholders when it comes to assets of the company or the issuer in case of a bankruptcy. So bondholders are much more safe and protected. Now, let's look at key attributes of a bond. Issuer entity we looked at, that is the issuer entity is the entity you're lending to. CUSIP is a unique identifier for that particular bond product on the market. So this is a number assigned to each bond product. Uh, Principal amount, which is also called par value or face value, is the uh, simply put, it's the amount that you lend, and you invest into the bond and you get it back at maturity. Coupon rate, we discussed, is the declared rate, interest rate at which the bond is supposed to pay you an interest, and bond yield is the actual rate at which you get paid. We'll elaborate on coupon rate and bond yield further. Coupon frequency. Frequency of payments are either semi-annual or annual. Settlement date is generally T+2 for a bond. This is the date that at which you receive the bond in your portfolio, and it's generally settled in 2 days. And this is the date that your interest calculation starts. Maturity date of the bond is the date declared by the issuer on which day the bond matures, and you get paid back in full. Claim ranking. It's either secured or unsecured, and there are some other layers to it as well. Claim ranking just simply signifies how much of a priority claim you have on your funds in case an issuer is not able to pay back all their investors in full. Credit rating. This is simply put, mandatory feature of FI products in many cases. There are many credit agencies such as Fitch, Moody's, S&Ps who provide credit ratings. They go from AAAs to AA's, A's to B, C, and D, and so forth. Credit ratings are important for bonds, and we'll look at this concept more as well. Use of proceeds is basically the application of funds that the issuer plans for the bonds received, and this is also important information that can be scrutinized by an investor. Yeah. Okay, let's look at bond yield versus bond coupon rate, the differences. So coupon rate, as we said, is a predefined interest payable by the issuer to the bondholder. However, the yield is the actual interest paid based on the bond price and coupon rate. Coupon rate is calculated on the basis of the face value of the bond, which is the same as the issue price. However, yield is calculated based on the market value of the bond and exists for that point in time. So bond yield is very dynamic because bond prices change in the market. They are not stable, or they don't stay the same. And yield is very dynamic. It is calculated based on the bond price. Coupon rate is always fixed, and so is the face value of the bond. Central bank's interest rate changes have no effect on it. So central bank would be in case of Canada, Fed would be in the case of US. They, as we know, change interest rates. The interest rates go through a lot of transition, but it does not affect the coupon rate of a bond. However, bond yield is dynamic and completely dependent upon fluctuations in the bond's market price, which can be a result of central bank's decision. We'll elaborate on these concepts more later in this video series. So that was all the information on bonds. Keep watching the channel for more information on bond pricing and trading as well. Thank you very much for watching.